Hey traders, welcome to Charts and Coffee. Happy Tuesday, everybody. Just a quick heads up. We have Powell coming up at 10 a.m. So this morning we're going to hear from him. I believe audience questions are expected. He's in Amsterdam, I think. So we do have at the top of the hour, even though we've had this PPI response that largely it seems the Russell is liking the best at the moment. Let's jump on over there. Right now, the Russell's probably recovering from that initial. And look, the wick went lower, the wick went higher. That's just pretty common in terms of response to any kind of major event. CPI will be that plus more. So we're taking a look at what we've got here early this morning. And for the most part, it does look like the S&P, NAS, and Dow have recovered from that initial volatility. You'll see that on the 5-minute time frame. So really nothing changing in terms of, and what's with my daily time frame here? Nothing really changing. There we go, or not. In terms of the volatility we're dealing with. Hey, bot, we'll have to take a look. Oh, okay. So yeah, I gotta sort out my charts. I hope everyone had a good transition in terms of the TD to Schwab. I have to say that all my indicators were there. Layouts, there we go. Layouts appeared, so that was good news. One less thing to deal with this week. So we are looking at pretty much status quo for the morning, marginally flat, just trying to get above the previous session close. So quite a recovery from the initial reaction of PPI. Remember, any of the hot zones that have to do with volatility, have to do with employment or inflation, are going to have a lot of volatility. And that's exactly what we're seeing here this morning. So a quick recovery on that. Now, by the way, notice I didn't mention at all what the numbers were because it's really more about the reaction to the numbers. So ultimately, we saw higher yields for just a bit. If you take a look at the yields along with the indices, they spiked lower, which means higher yields. But they've obviously come right back to where they were. Looks like we'll be opening in bonds above the previous session close. And let's see here. What else do we have? That's about really it in terms of the morning. Powell's the big event for us at 10 o'clock. And that's going to apply to a lot of things because Powell's tone, we're going to have to presume, is going to include his knowledge of whatever that tomorrow, what we get today, shan't be boring. As always, if you have any questions, feel free to type them in. Let me know. Let me know what symbols you all have on your radar, time frame, etc. And let's get to it. Let's take a look at what's going on with the Dow here this morning. And what do we have here? Taking a look at the Dow, just barely above the previous session close. Again, that wick accounts for what we saw at 8:30. That's some wick. So we'll see what happens there. Now, remember, just because we're strong before the bell or weak before the bell, it does not mean that's what's going to echo into the clearing range. Powell's going to largely dictate what happens there. Let's go take a look at gold. Gold did test the daily price movement range yesterday. My concern with gold was mainly, what treasuries were going to do and the way that gold will respond. Remember, gold is a reaction to real yields. Real yields are the difference between the lower end of the yield curve, the nominal yield of a bond, minus the rate of inflation. And so the concern is anytime we do have any kind of inflation metric, how is gold going to respond to bonds? So far, gold's responding pretty positively after dipping into the daily price movement range volatility-based support on the daily. All right. And what else do we have here? Good morning. Good morning. Let's see what else we have here. Let's go take a look at crude oil. We have a little news out of OPEC this morning. And the OPEC news has to do with the forecast. And output does, OPEC has reported that output has been falling, which should generally be bullish to crude. However, they also mentioned in that same little soundbite, or whatever the news was coming out of OPEC, that the demand forecast is unchanged. So even though there's a little bit lower output, it does seem that OPEC was already bracing for that. And with the demand not increasing at all, we can see for the morning, crude has continued to sink. Now, with that being said, crude has already made its move into this lower area of a range as of probably the big candle was the 1st of May, where not only did we break the 200 propulsion, which is a combination of a short exponential moving average, the 8 and the 200, and we're still kind of hovering. Look at the gravitational pull around the anchored volume weighted average price for the year. So crude oil traders are not willing to drive it much lower below that. They're not able to get much higher, and today's news is probably not going to help a whole heck of a lot. However, there has been good support in the daily price movement range, but with red candles, I'm not really a willing buyer of crude. But then that begs the question, even though crude's down, it's flat. Is that negatively affecting energy stocks? And it's starting to wear a little bit on energy stocks. You can see that sell-off day in crude actually accompanied energy stocks printing their first red bearish candles. So that's another thing we have to keep an eye on going forward. All right, let's go take a look at gold. What about copper? All right, so copper has been a big story. A lot of the metals have been a big story this year. Copper continues to move higher, and that should be good news for maybe not gold miners, right? Even though there's a lot of gold mining stocks also weighted within the XME, that should also bode pretty well for XME. But there's been a pretty interesting disconnect between the strength we're seeing in copper and things in XME like Alcoa. And oh no, Alcoa's doing all right, but Freeport, let's see what Freeport's up to this morning. And there is a question on Freeport. And the question is, good morning, I'm holding FCX 53 strike expiring this Friday with a pop this morning and a break over 52.50. Can we see 53 by end of week? That's going to be up to one thing and one thing alone. Kristen, what I would be looking at is the April 29 high at 52.5. We'd have to get through 52.5. So to your point, would that be a catalyst for higher highs? The answer is yes. That would be likely a catalyst for higher highs if we can break through 52.5, close above that level, and on subsequent tests of that level, we see that phenomenon, which is charting 101, of resistance becoming support. If we can see that particular reaction to that level, there's a good chance that 53 is not even the end of the road. But to your point, it makes the travel to 53 a whole lot more logical if we can get above 52.5. But you can see how persistent that's been. We've topped out there on April 12. We topped out there again on April 29. And that's exactly what we're dealing with right now. Keep an eye on copper, though. It's a little disappointing, like I said, that certain stocks are not responding to copper as they normally would. I don't want to say should, because nothing has to do anything. But you can see there's a little bit of a disconnect for now with the rally in copper and what we're not seeing in XME and FCX. Is it troubling? No, but it will get my attention, right? So in terms of the overall move higher, let's see, does the rising copper, gold, and SPX, well, so let's take a look at the ES. Is ES necessarily rising overall in the way that copper is? Not necessarily. It's at least bullish, but it's still quite choppy with some bullish momentum. With the falling presidential rating, I don't factor in the I'm not going to look at the election cycle as something that I'm necessarily setting up as a trade. It's a background, obviously an important one, but it's a background effect. The trend of the actual symbol will take precedence, but would it make sense to be a little bit more cautious going into the election cycle? I mean, obviously, there's the uncertainty around that, which I think is going to make focusing on what trends we do have all the more important. Would SCCO be an alternative to? Will we take a look at copper via SCCO? Someone asked me about SCCO once, not too long ago. My issue with SCCO, Christian, is not whether it's relatively strong. There's no argument there. If you're interested in shares, it's not a bad way to go. But if you've opened up the option chain and if you're looking at some liquidity, it's tough. I mean, there's 847 open interest at 115, which is pretty good. I'll give you an example. There's 371 open interest at 110. Having at least 500, which is low really, but having at least about 750 open interest is pretty key. It's a little illiquid. It's not a no, but just keep an eye on that open interest because we need that for narrow spread. We need that for the ease of getting out, right? Anyone will sell you an option. If you're out there in a bid and there's some reasonable open interest, there's a tension on that strike and someone will write you that premium. The question is, if the trade goes against you, how likely is it that someone's going to take that off your hands? And that's always the challenge with illiquid strikes. To what degree do we see interest in something when it's going against us, as opposed to when it's going in our favor, someone being willing to write us a call or a put or what have you. So that would be my main concern with SCCO, but not a bad liquidity at 115, which is the mean reversion zone. But the reason I bring up 110 is because the upper end of the mean reversion is around 114 and a half. So the slightly out of the money 115s would be okay. But if we were to sink lower into the mean reversion, that's where the 110s would be in play. And I'll tell you, for such a low cost stock, $120 stock, the fact that the May 17, the third Friday of the month options are 5 wide, that's another indication that there just isn't that much interest. Otherwise, this would be narrower, maybe 2.5 wide or 1 wide between strikes. So yeah, keep an eye on it. I like it. You're right. Good looking stock, good looking chart. Just be careful about, the mechanics of what, aside from the screen, right? I mean, we make a lot of our decisions off the chart. Most of our decisions, right? But there are implications for illiquidity. There are implications for the 5 wide spread, things like that. And I'll factor that in to the risk side of what I'm looking at. So I agree, Austin. Yeah, wild times because, the bottom line is, and we're going to hear from Powell in less than an hour, wild times because the certainty that we as a trading and investing public had in October, November, December, January through March, the first quarter of this year, that certainty about what the Federal Reserve was planning on doing was a lot more, certain. We had a lot more confidence around the fact that we could be seeing 2 to 3 to 4 rate cuts, when now that's shifted lower to 1 to 2. And we still are hearing from certain Fed members who insist on talking hawkishly, even though Powell said rate hikes will not come before rate cuts. I'm not going to second guess him. I'm going to take him at his word. I mean, at some point, that's kind of what we have to do. And the macroeconomic confidence that we had through the first quarter is absolutely gone. And that's why we're dealing with the chop, because the fuel for that optimism, the fuel for the buying at higher highs and the overall uptrend was that macroeconomic certainty of monetary policy, much more dovish than we're hearing as of, basically since April. And that's how abrupt the shift, quite frankly, was. Really abrupt shift there. Okay, next up is... It makes sense. Yeah, Christian, I like SCCO. Just be aware of the liquidity. What else do we have here? Let's go take a look at, we're seeing RTY head higher. So I'll be fairly optimistic that KRE regional banks could follow. We're seeing some strength in Dow and S&P about 15 minutes before. So everything but the Nas at the moment has climbed above. This is all pre-market, of course. Everything but the Nas has climbed above the previous session close to some degree. RTY being a 1.25% above, but bonds are also showing lower yields. Let's see what the U.S. dollar's up to. Bear with me. Let me type this in. It amazes me when I mistype a symbol. It's amazing. Oh, there's a contract. There's a stock associated with it. Amazing. All right. So many symbols out there. So little time. All right. So yeah, bonds are printing the first green candle that we have seen in a very long time in the ZB futures. So that is lower yields. A lot of some optimism. Interesting. 45 minutes before Powell. Let's go take a look at the US dollar. So we could view that via the 6E. All right. Via 6E. And you'll see there that the euro is climbing pretty well since the 8:30 volatility. So the aftermath of PPI is pretty bullish. And again, notice I'm looking at the euro for the US dollar, because the US dollar basket, whether you're trading DX futures, whether you're looking at the DXY, whether you're looking at the UUP ETF, that is representative of a basket of other currencies versus the US dollar. And remember, 58% of that basket is euro, which is why I like to look at the euro as the best lens to view the US dollar strength or weakness as. All right, what else do we have here? So again, everything except for the NAS is above the previous session close. I mean, no doubt we're probably getting a little of an assist from the meme stocks. Obviously, there was a lot of discussion. Twitter or X or whatever that thing's called now was quite active yesterday because Roaring Kitty, I mean, really, that's the world we're living in right now. Roaring Kitty is back talking about GME. And that's going to obviously be something that the NAS, S&P, and Dow do not care about, but it's going to affect small caps more. So we are now in a world where someone named Roaring Kitty, and there was a couple really good documentaries. I even watched the movie Dumb Money about that whole saga. What an interesting time. What an interesting time we are trading through. But remember, when you're looking at these meme stocks, it's fine to trade them. Obviously, if you're comfortable with the higher volatility and risk. But remember that when it comes to the impact of those stocks and the broader averages, they're not weighted there. They don't care. So just remember, certain moves in sectors or even in meme stocks can have an effect on very specific corners of the market, but not necessarily all of them, right? But nonetheless, this is where we are about 12 minutes, 11 minutes before the bell. Yeah, as far as GME, I'll tell you, gang, I don't play meme stocks as a general rule. I don't mind to jump in and trade from time to time, but that's not going to be usually my focus in any way. What I like to do, what I find scales, right? Let's talk about this for a moment, because that's a great question, Eddie. What scales? Is there money to be made because someone tweeted and GME is up? Sure. But remember that these things are not necessarily institutional participation. These things are very much retail. Not that there's anything wrong with that. But when you look at something like what we're dealing with right now in GME, I know it's very appealing to say, hey, Rog, it's trading at $70 right now. And it was at 17. I get it. But this is not necessarily what will scale. If I need something like a GME or AMC to make these kinds of moves to grow an account, I'm in trouble. Because these are not things that we can do week in and week out, month in and month out, year in and year out to grow an account, right? These are things that just sort of happen. I guess they're kind of fun, certainly amusing. But if I'm thinking about the scalability of being, a trader who wants to grow an account, every week, every month, every quarter, this, like I said, it's sort of a sideshow, but it's not something that I spend a lot of time looking at because think about how long it's been dormant. But it is a lot of fun. It does add a lot of interesting narrative to the to the broader averages. Now, when someone mentions Netflix, now I would not consider Netflix a meme stock. I mean, Netflix is weighted heavily, right? It is weighted heavily within sectors and indices that we watch. So you can have a meme event hit a real stock. Am I calling GameStop not a real stock? Not a real trading stock. A lot of fun though. But you can have a meme hit a high concentration weighted stock. That's probably a little bit more useful or interesting, but it takes a whole lot more to move something like Netflix than it would something like GME or AMC. But yeah, thank you for the questions. Yeah, one tweet, and obviously we're back. We're reminiscent of 2020. Curious how this will end. No doubt in a lot of tears. Some folks will be hitting the confetti button in their office. But yeah, most likely it's going to end like it did before. A lot of bumps and bruises. Be good to each other, gang. I'll see you tomorrow for Charts and Coffee. Heads up for Powell at 10 a.m.